What, in your view, is the main driver that we've been seeing for commodity prices? Is it demand shock, supply shortfalls, or speculation?
Look, I think most of it is very much on the demand side. I think the supply side continues to play a pretty supporting role. But as we saw the PMIs out of China, particularly for things like steel, PMIs continue to print very strongly. Manufacturing PMI is still above 50. So we have this combination of this recovery in goods demand, which is really starting to gather some momentum. And at the same time, we're still seeing some of these supply side issues, such as what we're experiencing down in Chile with respect to some labour issues in the copper mining side. And so all these things are combining to bring us to what we think is higher commodity prices over the next 6 months.
Demand factor also key for oil markets. You have Brent nearing 70, WTI testing 67. Yet oil companies are not boosting output to take advantage of these higher prices. Now, what potential scope might this allow then for OPEC Plus to increase supply in the second half? And what does that mean for crude?
Yeah, I think crude oil is probably one of our key calls. We expect that crude oil prices will be at least trading as high as $75 as we go into the start of next year. Now, actually, we're not that far away from that. The key things that I took from at least the technical meeting from OPEC was, firstly, inventories that were built up over COVID-19 are completely gone. Effectively, we have, at least on the OECD level, we have oil inventories that are basically around average levels, actually heading a bit lower than that. So the market has clearly tightened up. The strategy that OPEC has played out here is working in that regard. But the second point, I think, that will continue to force up crude oil prices was that decision in Holland to begin to crack down harder on the producers of oil with respect to the emissions that it generates. Now, that will only further drive investment in the oil sector down. We haven't seen a significant pickup in oil investment over the last 12 months or so. Partially it's COVID-related, but also the fact that the regulatory side is very uncertain. So net-net, we can expect the market to stay in deficit. That will force prices higher, particularly as the vaccine rollout really gathers momentum now. And we see that, particularly between places like Europe and the US, they'll start to travel more. Airline traffic will begin to pick up, intercontinental, and that will see another pickup of 3 to 4 million barrels. Yep.
Wayne, I want to get your views on where we are when it comes to base metals, the iron ore rally in particular. Take a look at this chart, which shows that projected earnings, of course, Australia being a major beneficiary, projected earnings over the next 12 months when it comes to the materials and mining index are now at the highest level in over 13 years. Now that we've had a bit of a breather, is the rally still intact? Are we still talking about a super cycle?
Yeah, I think I still challenge the super cycle idea a little bit. Largely because the last time we had a super cycle, it was largely due to the urbanisation and industrialisation of China. Obviously, with this shift or the transition economy to lower carbon output more generally, is going to take significant amounts more of nickel, copper, all the metals, as well as a pickup in infrastructure, such as commodities that produce steel. So generally speaking, yes, we have these sort of structural demand drivers in play over the next couple of years. The argument I would make is that, at least on the copper side, we could see a bit more mine supply come into the market in 2022, which could cool prices a little bit. However, until then, we see the market very, very tight, and these sort of prices continuing to prevail. Just on the steel side, clearly, the more we discuss the reduction of emissions, and particularly China attacking emissions pretty heavily now, and they'll have to continue to do so over the next few years, clearly that's going to pave the way for higher demand for high-quality commodities, such as higher grades of iron ore, and as well as that, natural gas to help in this transition, and particularly for things like gas, I think that's been largely forgotten in this strategy over the next 5 to 10 years.
Wayne, you talk about China. I want to get your FX views on what happens to the yuan now that we've heard pretty clearly from the PBOC and authorities that they want to stop the rise.
Yeah, I think that at least on the PBOC side, I think their strategy is to basically slow the appreciation of the CNY. I'm not certain that these actions will bring about a depreciation of the CNY. I think it's very much to slow the appreciation of the CNY. Of course, it's a monumental action in the sense that after talking about their concerns for some time now, this is actually real action on the table. However, of course, when we think about our view, we do see a weaker dollar over the next 6 months. But after that, we think that real interest rates in the United States will start to rise. We think the interest rate differentials will begin to play in the US dollar's favour. So at least for China, I think they have to probably deal with this appreciation, particularly against the dollar over the next few months. But I think at least from our perspective, we expect the dollar to strengthen in 2022. We think that the euro dollar, for example, goes to around 125, and then we think it turns around and heads back towards 120. So at that point, that would start to give everyone a bit of relief, at least those countries which are pretty concerned about the appreciation of their currencies.